We've seen the rand trading being marked by volatility over the past weeks, and that's been compounded by thin volumes as well. Players spooked by the wild swings, it seems. Give us an update on the status of the kind of volumes we're seeing pass through the markets right now.
Well, we do believe that there's a considerable scope for the rand to retrace back to the 774 region in the short term, purely because of the fact that we saw that extended rand decline in recent weeks. And that's really based on, well, we're expecting to take advantage of that pullback to buy cheaper dollars, given the fact that we do believe that the Eurozone debt saga is likely to continue for a number of months, and the global economic outlook is still expected to get worse before it actually shows some kind of improvement. So today, if the US consumer confidence data does come out a little better than expected, and the housing market data as well, we could see some further extended rand short covering. If not, if it disappoints and we see the global recessionary fears continue, we could see the rand come back on the back foot. So that would obviously play with the volumes that we're seeing. We did see thin volumes over the past couple of days, and that yesterday possibly increased volumes, which would have obviously over-exaggerated that improvement. However, we do expect that the recovery in the rand is expected to remain short-lived, especially because the number of factors that are driving the currency weaker are still in play. The global recessionary fears are still there, and the fact that we could possibly see a double dip is quite rife, and that could obviously keep the rand under considerable pressure going forward.
Of course, a lot of that direction being provided by what happens on the euro front as well. So in that light, I mean, what are you seeing? Because we've seen some strength filtered through to the euro, but like we've been saying, uncertainty is still rife, and you know, the fundamentals have not changed when it comes to all that's been influencing the kind of risk aversion that's been at play for the past couple of weeks.
Yes, Alishia, the fundamentals are still the same. It hasn't changed. And the fact that EU officials are looking to ring-fence Greece's debt woes, and also to expand the quantitative easing measures, and also possibly reduce their lending rates as early as next week, is going to obviously add some concern whether they actually do go ahead with that. We're expecting the lending rates to be dropped by next week, by the 6th of October. But that is a bit of a concern whether they're actually going to continue with the rest of the measures that they are planning. So it is playing a large part in terms of the volatility and the uncertainty levels that we are seeing. But as the G20 ministers met last week, basically all the heads of all the regions are putting mounting pressure on the Eurozone to address the issue. So there's going to be a continued volatility and uncertainty going forward, not only just in this week, but in the coming weeks as well.
Shireen, let's leave it there. Thanks so much for your time this morning. Shireen Darmalingam is Macroeconomic Strategist at Standard Bank.